Hello and welcome to this April 29th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we are featuring Google, ticker symbol GOOG. This is over a $160 billion company. Google came out with earnings about a week and a half, 2 weeks ago. You can see that had a terrible reaction to its earnings report. Gapped down, moved quickly below its 50-day moving average, came back up, tested it, and has continued moving lower. We did on Wednesday, however, print a hammer candlestick. This is a reversing candlestick off of a downtrend, and you can see we also had moved below a key recent support level before reversing and printing this hammer. So I do think that there's a good chance that Google could rebound from the current price, and from a risk-reward standpoint, certainly seems like a pretty good possible trade here. Notice that the oscillators, both the RSI and Stochastics, oversold. Stochastics a little bit more so, with Stochastics right now down in the 5.5 range. The RSI is getting very close to oversold at 30. It's currently sitting at 33, so it's not far from being oversold as well. A couple of areas that I'd look for support, and there are a couple of different ways to consider trading Google. Maybe the most conservative approach might be to sit back and wait and see if you can get this move all the way down to 500, which is where we broke out from in early October. We've never gone back to retest that level. So this is an area certainly that if we lose 525, this would be the next key area on the chart for Google. So if you wanted to play it very conservatively, you could just simply wait for that 500 level, see if you can get it down there. Maybe a little bit less conservative might be to go ahead and take a position partial position near the current level and put a second position down closer to 500 to kind of average in maybe around the 515 area, and then use any close below 500 as a stop. So that would give you maybe about a 3% risk. If we turn from this current level and start moving higher, of course you only be in with a half position, so that would be a little bit of the downside. The other possibility would simply be to enter here at the current price, or maybe closer to 525, and then use this 520, 525 area as your stop. So it really depends on the risk level that you want to take here. But Google on any rebound is going to have some initial resistance at its 20-day moving average. We've got a MACD that's pointing straight down, so normally when that's the case, when you get a reaction move to the upside, you get some selling that takes place at the 20-day. So right now the 20-day is sitting up at 553, but it is dropping rather rapidly. So let's look at, in the short term, at Google trading in a range from about 525 on a closing basis up to the 20-day, which is currently at 553. Intraday, you can see there have been a couple of tails down around this 520 level. So on an intraday basis, you might find a little bit of support at that area. But I think Google looks pretty good here, at least in terms of a risk-reward trade. If it breaks below 500, I think that clearly would not be a good sign for Google and probably for the overall tech sector. But let's see if we can hold it here on Google at 525. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.